Hi, this is Shane with the Rational Trader. It is Wednesday the 30th. My result for the day is 152.50. Whoops. And I've got all four markets going. Two of them using what I would call production-ready codes from complete analysis. The other two are still in pretty conservative, though the yen did really well. We'll take a look at that. So max loss day here in oil. A Babe Ruth day. It's Wednesday, so the oil report came out. Let's see, what do we do here? So, okay, we got long back here. This is an interesting trade here, actually, because you're at the value area high, and you've broken through the high of the session, actually, and now you're pulling back, and then that looks like a pretty reasonable trade to me, actually. I especially like if you've got a new high that's set right there. If you're going to get in before then, and then you'll benefit from the pop from the stop runs. There's not quite enough there to get me to scratch though, so I take a loss there. It's kind of choppy here prior to the news. Oil news is at 7:30, so we're staying out, and then the market takes off nicely. And I get long there, which is, what do I think about that as a human? I don't think you really understand that it's done going up until this bar here. So that's reasonable. Anyway, that takes me out for the rest, because that's two losses, so I'm done there. So it doesn't really matter what happened next. In gold was interesting because it was FOMC announcement day. And so it was pretty quiet. It's interesting because I had, when I was trading the indexes, of course, you pay very close attention to FOMC day and make sure that you're out prior to the announcement. I trade gold, and I always stop anyway before the announcement would come out. So I just wasn't even thinking about it. Same thing with the yen and the euro, for that matter. But it is a factor here. And you can see the market was pretty quiet. And I got into this trade here, not quite enough to get me to scratch before it rolls over on me. It's really just chopping around here at the value area low. And it's spending so much time, actually, that the point of control is coming back down to it. So that's not a good sign for my trade anyway. It's kind of similar to the oil one, where if you're going to get in before this resistance here. And then you're looking for that pop. With the stop run is really what's going on, but there just isn't one there. It just rolls over, and then all this craziness here is the FOMC announcement. Okay, I'm done trading oil or gold at that point. The euro is a similar issue, right? The euro is here. Here I make 5 ticks, but you're really just thrashing around the value area low here, waiting for the FOMC announcement, which comes right here, and then off the market goes. So I got short there. That's a pretty decent place to get short if you're gonna trade this chop. Anyway, makes 5 ticks, and basically I think just sort of lucky there that I didn't take a loss there. The yen is another story here. The yen. Really a nice entry here. And what's interesting about this trade is that the trade management is pretty aggressive, but we don't quite trigger it on the initial thrust here. We need to get 10 ticks before I'll do anything. We don't quite get it, and so then it pulls back. So if you're watching it, you're just agonizing over the fact that you almost made it, and now it looks like you're going to take a loss. But then it turns around and takes off nicely, and then right there we do an add all automatically, and then this is where there's some element of luck involved, because here is when that FOMC news comes out. This trade, I entered this trade here on the on this break, so that's actually right. It's hard to say when that happened. That probably happened right when that news came out, which is bad. All right, so this is interesting. We got to think about this, because I stopped trading at 1040. I stopped taking new trades. All right, but there's nothing in the system that says don't do an ad when you're in a trade. So we come into this danger zone here of the FOMC announcement, and I wasn't here to close the trade out. It adds and then ended making 53 ticks, so it looks like plus 37 and plus 16 on the second contract. Even somewhat more annoying is that, well, I just got nicked there. So really just a beautiful entry down here as the market took off nicely after that FOMC announcement. So 53 ticks there, which ends up making up for the oil and gold losses. Now, what we've been talking about, what we learned from the December and then January experiments on the analytical process that we apply to the machine learning system output. And we talked about this yesterday, and then there was a long video on Sunday, so you can look that up if you want some more detail. But some of the key things here are minimizing one of those outputs from that analysis, and that outputs the risk factor. So in December, we had a risk factor in the oil market of about 20, which is 20%. It means that what we see from the predictions is that 20% of the time you're going to take a max loss day. In January, we had changed the analytical process, and the risk factor was closer to 30. And in January, I just got whacked badly. All right, and so one of the things we learned about is how important it is to look for the commonality of behaviors over time, and minimize that risk factor, even at the expense of profit, particularly if you're trading multiple markets, because then you can trade more. All right, so if you can't be trading all these markets with high risk factors. That's just not going to work. You're gonna blow out you're gonna hit your daily risk limit. So my approach, my plan here was oils is the market that is kind of moving the most. It has the most movement. So go ahead and take more risk in that market, just in terms of what the risk factor number is out of the analysis. And then in the other ones, take less. All right. So let's actually see what we have here. Unfortunately, I don't have it on the trading computer here, so where I'm recording, but let me look on the dev computer. So oil is at 14.4%. No, that's gold. Oil is at 14. Actually, it's the same, 14.4. So 12 max loss days out of 83. That's using the shorter time frame. Hold on, we need to look at that across a larger time frame. Give me just a second here. So take just a minute to run. Processing. So we want to run this data for June through January. So just to make sure that you're clear, what we're doing here is we're not, most system development that you see in trading takes a set of data and then creates rules for a trading system that then fit that data. Okay, so you're fitting the rules to the data, which is not a viable approach, because you don't know what the future data is going to look like, right? With the machine learning system, we're not doing that. What we do is we give the machine only data through, in this case, June, and then we predict on data that the machine has never seen, which in this case is July through January. And then we analyze its predictions to understand what behaviors in that market do we see, with some level of repeatability, with some level of profitability. Okay, and we actually run a full simulation that shows how if I chose this particular set of behaviors, what would actually happen? So we're doing what amounts to a replay. We're just doing it not inside Sierra chart. And so part of that output is, well, how many times will you hit your max loss, which is in oil, that's 2 trades, versus how many days are in the data set. And so in this case, it's 23 out of 158. So the risk factor is 14.56%. So what I want is I want that below 20, and the further below 20 you get, sort of the better. You got to find a sweet spot though, because I can get that risk to 0, but then you're not taking any trades, so your profit potential is 0 also. So oil shows a very nice profit potential at 14.5% risk. So I'm willing. What I want is I want the other markets at lower risk factors. I don't want to do all 4 markets at 15% or 20%, right? Unless I add more money to the account, because your probability that all 4 will hit max loss days goes up. All right, and so oil's at 14.5, gold's at 14.4. The yen, the analysis is not complete, but what I'm running at right now, 6J replay, is 11.3%. Okay, so pretty far away from 20. And then the euro, I'm hardly doing anything at all because I just haven't finished that analysis. But the ones that jump out there's just a couple of codes, so I'm not even sure what the risk factor is, but it's in the low single digits because we're only looking at 1 long code and 2 short codes. This is a tiny amount. All right, so this gain here is somewhat surprising. I'm surprised we're even taking any trades at all. But I'm working on it. I was working through the 6J analysis today, and then I'll jump to 6E. And part of what I'm doing is defining the process in a way that is rigorous and repeatable, and as automatable as possible. Because what I want to do is every month, sort of take 6 months worth of data. So add the most recent month's data, take off the 7th month data that's further back, and then redo the analysis and compare it to what I'm currently using. You're looking for drift. Has the market changed much? All right. Do we continue to see the behaviors that we've been seeing, or are new ones showing up? All right. And so I want to. So part of what I'm doing as I incorporate the learnings from December and January is codifying that in a process that we can repeat. So in the same way that we take data, the most recent data, and give it to the machine and retrain the model every week. We want to do the same thing with the behaviors, with the analytical process that is the output of the machine learning system, and continually look at that analysis to see if what's no longer working, what's now working, and or if it's just staying the same. We kind of don't know yet. If we're going to end up with a set of codes, you just run these all the time because those are the ones that work for that market. Or if the character of the market changes enough over time that we see changes in the trades we want to take. Okay. All right. So that is it for today. So we have 2 more days here. So we're starting now from actually it's actually 128. But there were no trades that day in any of the markets. So up 247.50 this week so far.